Let's shift gears and let's now connect with Sumit Malhotra, Managing Director with Bajaj Corp. Sumit, good morning. Thank you for joining us. Now, for Bajaj Corp, the June performance or the Q1 performance was rather impressive. So share some more details with us. What led to the 30% growth for your bottom line?
I think there are two factors to this. One is a macro factor, which basically most of the FMCG products and the sectors, and also the light hair oil sector as it is, has been growing very well. So consumers are not downgrading at all in this segment that you have. Secondly, I think all the hard work that we have been doing for the last 2 or 3 years, especially on brand building and distribution, have really started yielding results now. And what you see now is a culmination of that kind of the due diligence, if you can call it, or the hard work that has come in over the last few years.
Right. So what has been the volume growth during the quarter, and do you think you will be able to sustain this in the coming quarters as well?
The volume growth in the last quarter was 22.5%, and it's been exceptionally good this quarter, though we have been actually clocking more than 20% volume growth for the last 6 consecutive quarters. So it's not an aberration, and therefore I don't see any reason why it should drop substantially in the next 2 quarters.
Sumit, if I look at your operating profit margins, the good news here is that for the quarter gone by, which is the June quarter, your operating profit margins were at 28%. But the fact that global commodity prices have shot up again, are you in a position to defend such strong operating profit margins?
Actually, this quarter was exceptionally good, and EBITDA margin of around 28% is very good. And I believe that even if we can maintain the EBITDA margins at around 25%, it would be an achievement this year. Yeah? So all in all, I think quarter one was better than what we had expected, and even if we can maintain around the 25% EBITDA in the coming quarters, it should be good enough. Yeah.
So tell us about your hair oil segment as well, because that contributes about 90% to your revenues. How was the performance in the June quarter and the outlook for FY13?
Okay, within the hair oil segments, you have 2 broad categories. One is what is called the coconut oils, and the second is the value-added perfumed hair oils. Within the value-added perfumed hair oils, we are in a segment which is called light hair oil, which basically means a hair oil which is lighter, less stickier than the other hair oils. In this, we have around 55% market share in value terms, and we are actually more than 3.5 times the size of the next competitor in this segment. We have been growing this segment at an impressive 17% CAGR over the last 6 years, and as a leader, I believe our responsibility is to continue growing this segment. Market share will come, because once you invest behind a brand, you'll keep gaining market share. So at this moment, as a company, we are actually looking at growing the market rather than the market share trends within the segment.
Do you have any product launches on the horizon?
Last year we launched a brand called Kailash Parvat Cooling Oil, which is doing very well. We are nearly 3% of the market already within a year, and I believe until this brand stabilizes, we will not be launching another new brand. So I doubt whether financial year 13 will see any new launches.
So what is the current market share in the hair oil segment?
In the light hair oil, we are around 55% in value terms. In terms of the total hair oil, which means including coconut and all the other hair oils, we would be around 8% market share.
Are you facing any raw material pressures, and what is your outlook on raw material prices going forward?
Raw materials have been fairly steady, with the exception of vegetable oils. Vegetable oils form less than 10% of our total cost of production. But the prices have really gone up this year. Apart from that, all the raw material and packaging materials are fairly steady. So I doubt whether you'll see any major jumps in RMPM prices in this quarter. Long term, you really don't know, because our biggest cost is what is called light liquid paraffin, and that is dependent on crude. And you will appreciate predicting crude prices is a difficult proposition.
Your company has also been actively looking out for acquisitions. Last time plans were shelved due to valuations. Tell us if you are in talks with anyone as of now.
See, acquisitions forms a very important part of our growth strategy, because in FMCG you can grow organically, but that's not a short method of growing. Inorganic growth, which is basically through acquisitions, is also a very important part of most of the Indian FMCG companies' growth strategy. So is it for us. We have been looking at acquisitions very closely. Unfortunately, I can't talk about it, because in most of the acquisitions you sign a non-disclosure agreement, which I can't break. But yes, I can tell you that we are actively looking out for a brand, though we are not desperately looking out for a brand to acquire, because we believe that the value, if you overpay, you'll find it much more difficult turning around, and therefore we are looking more in terms of it as a strategy for growth rather than a desperation to keep pushing our top lines and bottom lines.
Amit, broadly 36% of your total revenue comes from the rural market. Do we see this share increasing in the near future?
One thing that is common between us and most of the other Indian FMCG companies and brands are that the rural market is actually driving growth. In the year 2008-9, we got around 30% of our sales from rural India. Now we get 36% of our sales. Growth in the rural area in the first quarter was close to 23% by volume, and the urban was around 15.5 or 15.8% by volume. So there's a differential between the urban and rural growth, which is really driving most of the consumption in FMCG brands. To actually tackle this growth, and not tackle, really use this growth, we have got to really do two things. One is have a product for the rural area, and second, have distribution in the rural area. We are pushing both, and therefore I don't see any slowdown in the rural demand for our product.
And what about your view on commodity inflation? Because it still remains on the higher side. How is it affecting your business?
I don't say it easing off in the near future. And fortunately, in our case, there's only one raw material that is really commoditized in a true sense, which is vegetable oil, and that continues to rise. Like I said earlier, it's basically a small part of our total cost of production, and therefore doesn't really affect us that badly like it does most other Indian FMCG brands. But yes, it is a cause of concern, and we are very closely looking at the commodity prices.
Sumit, appreciate your time and thank you for joining us.